Welcome back to this lesson. In this lesson, we are looking at a bullish example of scalping the Asian session. And remember from the previous discussion, this is the weekly. Let me go back. This is the weekly order block we had hit there. Then in the daily chart, we had hit this daily imbalance. And from hitting this, our next objective would be, you can see here there's a gap. So there's a gap that was created right about here. Yeah. So this is our volume imbalance that the market came back into. So we'll look at an opportunity if we find any when we hit this imbalance, this volume imbalance. So what happened right after that? So after that, we see that when you go into, let's see the 1 hour first. So in the 1 hour, we see that this whole gap. So in the 1 hour, we moved from this premium to discount around this time. Then from this discount, we started moving higher as we had clear buy side liquidity. And from the buy side liquidity, we had this imbalance, which would be our next objective. We can see that from this daily, we had buy stops up above near this imbalance. So for our target, we'll be looking to exit at the nearest 1 hour or 4 hour. We can also use 4 hour if we have this one. So that's where we want to capitalize on our exit. But remember, the market has a high chance of running even up above, but we just want to focus on that rebalancing. So with that in mind, we go back to the 5 minutes. And in the 5 minutes, we see when the market moved away from this. Remember, there was a daily imbalance here. We moved lower, and from this lower point, we had this volume imbalance. And what happened? We engineered sell stops there, and from the sell stops, we broke market structure. That's it. So remember, you have to have a procedure you follow in the market, and from that procedure, when you do it today, tomorrow, 10 days from now, 20 days from now, that's how in the end you get your consistency, because when you follow a specific strategy, that's where your consistency will come from. So we see that we hit at 1930 and we broke structure during the Asian session. So there's also a high likelihood that this low may be the low created in this movement high. So with that in mind, we anticipate, or you can see that we broke structure with this candle, this one at 2035, but the market continued expanding. We did not create any imbalance. The market just continued expanding higher, and from that we just use our fib from the low to the high. From this low to this high, you wait for the market to come to equilibrium, and below equilibrium there is what? Sell stops. So with these sell stops here, that's where you want to anchor or enter your trade. If you had thought that this was the dealing range, you can see that the market even did not hit the equilibrium. So that's how you may know even that that dealing range is valid or not, because market will always come back to, if you are buying at a discount. So that's why you want to maximize on. So I'll just use the long position. We supposed we enter below this liquidity because we do not have any fair value gap, but also we can see, I think we hit the breaker. Let me remove that. So for the first trader who used these stops as his entry and place the stop there. Remember, we are targeting, we have the next, or we have this 4-hour imbalance to exit. The first partial would be here, and overall you target to hit, to fill this imbalance. The rest, you don't have to be there. It's not a must you get everything from the market. And if you would have entered from the breaker and placed your stop at the low of the breaker, it's just almost the same. So your stop loss, your target would be here, the first. And overall, we have seen that if you target the 4-hour to be filled, that will be there. So you can see how the Audusd even capitalized on making that expansion, and how profitable we became with this session of the Asian session. So that's it for this lesson. I would urge you to go into your charts and look for more opportunities. There are so many examples you'll be able to find, and be able to remember that we are not just entering to the markets blindly, but there is a process that we are following. So just outline that process, and then you can write your own model from it, and then in the end, I know you'll be consistent. So that's it for this lesson, and see you in the next one.